Futures Live. Sorry for the delay. Google Chrome crashed on me, so a big problem. Can I get an audio check? Can somebody please let me know if you could hear me okay? We had a technical issue, but we are getting ready for the new trading week. We're going to talk about the futures action, which is not looking good at current. Let's go to the big screen. We have the NASDAQ up. NASDAQ getting hit. Let's drill down here. We're going to go over big gap down here. Big gap down. We're going to go over Bitcoin. Bitcoin did a crash on Friday, nowhere near in line with the move on the stock market. We're going to talk about where I think Bitcoin is moving from here and the correlations that are going to drive Bitcoin moving forward. Stick around. We're going to go over the news. We get to build back better, folks. You know, we're like frogs in a boiling pot, and the heat is getting turned up very aggressively now. And if you're not paying attention and you're not getting out to vote, you got to do it. These people are robbing you. This new plan, this new bill that was passed and signed by the president this past week is a nightmare. And it's not for those people making over $400,000 a year. We're going to go over who gets hit and how. So let's kick things off with the futures action. First, let me check my audio check. Hello, Bob. Thank you, Seymour. Appreciate it. Jeff, thank you. Yep, Seymour, big gap down. All right, I was asked a question about my glasses. Okay, because the last live stream, I wore them. I kept taking them on and off. So the question was asked, you know, are your glasses broken? Are they somewhat twisted? The answer is yes. I have a tendency to fall asleep with my glasses on at times, and they fall down. I roll over on them, whatever. And these are brand new. I got to bring them in, have them straightened out. So it is not your monitor. It is not you. It is exactly right. These glasses are twisted. Larry, hello. The future is farmland near water, no doubt. Bob, evacuate New York. Yeah. Our esteemed, the Honorable Governor Hochul, has now tamped down on your ability to say he, she. Like, you can't say councilman anymore or councilwoman. It's just, I got to get out of here. Tom, hello. That's Lewis. How are you, sir? Lewis, happy Sunday to you. Trader Isaac. Don't forget to, yes, thank you. Yes, I always do that. I'm going to do that now, as a matter of fact, because I'll get wrapped up in my tirade. And there we go. So now I don't have to, thank you for that. Pete, hello. Talon, what's up, people? Time to burn this market down. Yep. I'm going to talk about the support level right here in a moment. Looks like we're finding support on the NASDAQ, maybe. WG Shocker, hello. M. McNeil, hello, sir. California is still here. How long, though? I don't know. You got a bunch of crazies out there. That's New York is bad, but California, my God. I know it's just LA and San Francisco, but man, what a mess. All right, let's get to it. Let's talk about the futures action. We have the NASDAQ, which is up at current, open at current, not up. And it is down over a 0.5 percentage point, spot 0.65% to be exact. We are flirting with a support level here on the NASDAQ. It's going to be interesting to see whether or not we hold this. And what the support level marks is a trading range that formed last Friday. We had gap down, traded sideways. Really no big upticks on Friday. The morning set the stage for the close, and basically we moved lower, stayed sideways, And now, what were the highs? This is why I drew this line up here. What were the highs is now acting as support. So we'll see whether or not this holds. Let's set up an alert here. And we'll just get notified if we break down to a new lower low. It's now 6:07 Eastern Standard Time. This is a 15-minute chart. We'll see whether or not we break down below it. And perhaps do a retest of the breakout point if it does fail. Moving on to the S&Ps. S&Ps are down spot 39%. They were lower. They bounced off of the third standard deviation Bollinger Band in purple. So no great shock. We got to rally back. But I don't think that this holds. I think we were going to move lower here. Sorry about that noise. I don't know why that just happened. Okay, moving on. Let's go to the Russell 2000. These are the small caps. A big gap down here. The small caps have been leading the market. They're doing less worse this evening than the large caps. So that's consistent with their performance of late. So equities, as we open up this evening, are looking pretty weak. And the fact that we took out Friday's lows like that, that's not a good sign. That is not a good sign. So what that means is that what was support on Friday now becomes price resistance. Moving on, let's take a look at currencies. The dollar is about flat relative to where it closed on Friday. If anything, this is a chart that looks like it wants to move up higher. Now, that being said, you take a look at a daily chart of the US dollar. And it's not really reflected on the Dixie so much. It's reflected more on, I guess, the dollar bull ETF. Yeah. So we're closing in on the third standard deviation Bollinger Band. We're in that neighborhood of where things usually generally stall out on the dollar. Doesn't mean it's going to crash. It just means it's probably going to pause here fairly soon. You saw it last back here, July the 14th. Then again prior, you saw it here, June the 15th. Seems like every month, May the 5th. Seems like every month this time you get a correction in the US dollar. So that'll be good for our precious metal trades. Back to the 15-minute chart. Gold. Gold moving lower here. Great shock. Moving lower by $3.20 the ounce. Trying to rally back 1760 is pretty good support. So maybe it'll hold, maybe it won't. Let's throw up an alert here. Either way, we have a new weekly low already on gold. Not loving that. Moving on, let's stick with the precious metal trade a bit here. Taking a look at silver. Silver is lower on the session. It's flirting with support. Initially, it moved higher, but now it's given up gains. I'm gonna flirt with something here. I want to throw up an alert. I want to see if we move to new higher highs. I mean, silver's just gotten crushed, and it's so cheap relative to gold. Okay, moving on. Let's stick with the commodity trade here. As a matter of fact, before we go to the commodity trade, let's take a step back. Let's take a look at other currencies that are out there. The Japanese yen. Japanese yen putting in a higher low here, 15-minute chart. The downtrend is still intact. That's bullish for the US dollar. But if we do get a breakout to new higher highs, that would be possibly bearish for the dollar. What would definitely be bearish for the US dollar is if you see strength in the euro as well as the yen. Now, interesting price action here on the euro in that what we're doing, or what we did, is we gapped down, and now we just went positive on the euro. So it's going to be interesting to see whether or not, let's take our crayon out. It's going to be interesting to see whether or not the euro has the cojones to be able to break out and close above an upper band of resistance, God forbid. Now, I would argue that the euro has every single reason in the world to trade down. Their leadership is horrible, horrible. They are about to go into probably a depression this winter due to energy costs. We're going to go to that in a moment. Stick around. So we're going to see here whether or not the euro can break out to new higher highs. If it does, that means good things for gold, silver, because the dollar will roll over. Briefly. The dollar is still the least dirty shirt in the bin. So our alert's set. A lot of buyers in here. There's a lot of volume. There's a war going on at the open. They gapped it down. Buyers stepped in. They're liking the support level. Let's go to, all right, we did currencies. Let's stick with the commodity play. I saw an article on Zero Hedge about, I think it was Goldman calling for another commodity rally. And initially, I scoffed at it, but I want to be open-minded. So I took a look at copper because they were somewhat bullish on aluminum, copper, and I'm going to go to a video in a moment about China blowing up literally cities. So I don't know how much in a hurry they're going to be building up inventories of copper. But I took a look at the price, and I usually stick with the weekly charts. And man, copper really, really ripped last week. And I did not see that coming. I have to admit it. So when you take a look at a weekly chart, a nice bull run here. The however is that I don't get holds. I think we need to pull back and put in a higher low on copper. So what we're going to do is we're going to keep an eye on copper. I think that this is a bear flag setup. As a matter of fact, that's why I have my red line drawn here. And we're already down below that red line. So I think we're at the beginning of a pullback on copper. Look for a higher low and then potentially a breakout to new higher highs. What you need to have there is global growth. So without China, I don't know how copper breaks out to new higher highs. They still have COVID lockdowns there. They're supposed to be reopening. Who knows what's going on over there? But copper, out of the ashes, rose a phoenix for a few weeks here. I mean, this is a bloodbath for copper longs. Now, moving on to home heating oil. Folks, if you live in the Northeast like me, stock up on home heating oil. We broke out the week prior to last week, continuation breakout. This is going higher. It doesn't matter that oil prices, was my light sweet crude, boom. Oil prices on the week last week were down, yet home heating oil prices are moving up. So you have a distillate that is outperforming the crude. That tells you that inventories are low. And buy it now. Buy it now. Stock up. Let's take a quick peek at wheat prices. Wheat was looking stable. It broke down to new lower lows last week. So no reason to go stepping up here quite yet. We're watching it. A few of my members are tracking wheat, so that's why we keep an eye on it. Where's corn? I have too many symbols up here. They knocked off my corn. All right, I have soybeans up here. Soybeans at a support level. Would I buy them here? I would keep a very, very tight stop. This could hold the support level, but very, very tight stop on soybeans. Corn. It broke out. It did a retest. I don't know. I think I need to see higher highs on corn before I got excited. I'd like to see it take out the highs of the week of 8.8, and that high was at 642.50 the bushel on corn. All right, let's go to comments, and then we'll segue on and over to Franklin. Welcome back, pal. How's Tahoe? I got your requests. I saw them. Any idea on FNGD 3 Tom, if you remind me later on and we have time, I'll definitely go over for you. You mentioned QQQ having support at 320, Bob. We'll go over Qs for you, Talon. Yeah, I think that trade is going to work out. We have the short position on the Qs. It's a hedge. It's not. We're not net short. And Talon, I know you know this. I'm speaking to everybody else. To clarify, 2 weeks ago we put on a hedge. We added to that hedge last week. It's basically a short of the Qs. So we did well on Friday, where the rest of the market got clubbed. So I still think that we're going to get lower lows on the Qs, and I'm going to go over some technical analysis with the yield curve, yields, and some sentiment indicators implying that we may want to perhaps even add to our short of the Qs. So, yeah, we will definitely go over Talon since you requested it. The man, the myth, the legend, Yoga Mac. Welcome. Stretch it out, team. We will. Good man. Yes. I'm horrible at doing that. Yes, like, subscribe, please help me out with the YouTube algorithm. Sold MELI and forgot Etsy. How about Etsy will drop on Monday open? Probably with the rest of the market. And that assumes you don't rally back. TZ Barton, hello, friend. Enoch Crench. Hi, Bob. Evening all. Hello to you, sir. Let's see what we got here. 4-hour chart Qs, head and shoulders setup. Yeah. We'll check it out. Devin, hello. Franklin, Tahoe is great. Just catching up now on time changes. I gotcha. All right, pal. Welcome back. We missed you. All right, let's get to it. So futures action, quick peek, E-minis getting hit. We have our alerts set for new lower lows, and we have the 10-year yield, folks, that is at the precipice of a 3-handle. We hit a 3-handle last week. We backed off. That's a problem. That's a major, major problem. If you're wondering why sorry if I'm screaming. If you're wondering why the large caps, in particular, the NASDAQ 100, also known as the triple Qs, are down more dramatically than the Russell 2000, it's because the 10-year yield. The 10-year yield is probably going to be above a 3-handle. We're going to probably open with a 3-handle tomorrow morning. Very strong chart. That's a problem for tech stocks. No doubt about it. Now, the dollar is also looking strong here. We know it's a little bit extended due for a pullback, but still looking strong. VIX is looking strong here. It looks like it wants to press up higher. We closed out the week last week with a 20 handle. So we're back in the 20s. So this is going to be a great environment as we proceed into the new trading week. We have our hedge on, right? We're short of the Qs. We are short of, we booked profits on Tesla short. That's gone. What else are we short of? Apple. We're short of Apple. We're short of the Qs because Apple is just so extended and it hit a lot of resistance. So we're up on that trade right now as well. So let's get to it. Okay. So Bitcoin. Let's refresh this. Yeah, it's melting away. So here's the problem for Bitcoin. Now, we had a major move on Bitcoin on Friday, and frankly, I wasn't paying attention to it because I don't own all that much of it. It's a very small position for me. So I don't watch it all that often. I know it's weak and it's been weak. Therefore, I don't want to buy aggressively. So the problem for Bitcoin, and I've been saying this for a while now, which is why I have the upper band and the lower band of support on Bitcoin, is that what this is called here is a bear flag setup, meaning you drift higher. You're not getting any down ticks, really. No sequence of 2-week, 3-week pullbacks to create a higher low where you could draw your trend line from one low to the next low. And then you watch for a breakout to new higher highs. Then your trend is established. We didn't get that. We were denied that. And when I see that, I always think that you have retail money moving in and they're bidding Bitcoin up and that it's doomed to failure. Now, does that mean that we're going to break down below 17,600? No. We could hold 19,000 for all I know, the high 18s, and put in a higher low and rally back. We don't have a crystal ball here. All I can tell you is what this crypto is doing right here and right now, and it is very, very bearish. I would not buy this pullback. I would not buy this pullback because I'm bearish on equities, and I'm going to share with you in a moment the correlation of equities to Bitcoin. So if you want to know what Bitcoin is doing, you got to know what the stock market is doing because the stock market is the tail that wags the Bitcoin dog. So it's a risk asset that trades with the stock market. End of statement. It is not the new gold. It could have a future in terms of being an alternative currency in the future because it's widely accepted. Is it a store of value? Not really. It hasn't been proven yet. So Bitcoin weekly chart is a basket case. This is a horrible chart. Now, when you take a step back and you take a look at Bitcoin from I don't want this, from a monthly time frame, what I did here is I overlaid in gray, there's a correlation Bitcoin to the S&P 500. Simple, right? At the peak, they were correlated 92% of the times. Think about it. Think about it. They're less correlated now because you've had a dramatic pullback on Bitcoin with a more magnified move higher on equities. So they're a little bit less correlated now than they were. But when you drill down, you can see the correlation here. Look at the perfect head and shoulders setup. Left shoulder, head, right shoulder on the 10-year, on the S&P 500, as well as on Bitcoin. Classic textbook stuff. So this resistance level up here at around 30,000 is going to be just that. There's going to be a lot of dead bodies, lots of zombies, also known as overhead supply up there. Do not go buying a rally on Bitcoin. If you dollar cost averaging, stay small. I'm doing that. So I don't care if we pull back here. It's dollar cost averaging, $50 a week. We're good. Now, where do I think it's going? If in fact we do see a continuation move lower, I think we're coming down here, 17,500. That's stop number one. If that fails, I think we're coming down here to 17,500. So if you're seeing bright red futures action on equities, you should expect you're probably going to get red price action or bearish price action on the price of Bitcoin as well. So just be careful. Know your correlations. Now, we've stated that, or I've made the case. Let's go to a daily chart to even make it even more magnified. We have a 53% correlation, and that correlation hit a bottom back on July the 12th, and now the trend has moved back up. You're seeing a little bit of weakness, but we're back above 50% of the time. They are correlated. So you're seeing a strengthening of the correlation between the S&P 500 and Bitcoin. So the probability of Bitcoin being down along with equities is very, very strong. 50% or greater are not great odds. Those are horrible odds. They're great for casino. Well, not even for casinos is great. It's horrible odds. You want far better odds. What you ought to be doing right now is something I'll get into a little bit later on when there's an article I'm going to go over about cash. And it's I think it's Morgan Stanley saying that you should be in cash. I'm going to talk about it in a bit. No, wrong, wrong, wrong. And I'm not saying you should be in equities. So now let's get back to Bitcoin. So if we've made the case, and if you buy into the argument that Bitcoin and equities are correlated, okay, how are equities shaping up here? What's the volatility index doing? Well, simple, simple. Let's take up a chart of the VIX. The VIX on the week last week saw its first up week since the week of the 13th of June. For those that are new, you don't currently trade all that often. The VIX, the volatility index, trades inversely generally of the S&P 500. So when you see the VIX moving higher, that means that people are putting on insurance policies to protect their long positions, or they're using the VIX to get short the market. So you saw an up week last week. The RSI, the relative strength indicator, is hockey sticking up. We bounced off of support levels. There was no follow through on the prior week's bearish week, no new weekly lows. It was an inside week, daily view. Now, this is where things get real fast. The RSI on a daily time frame broke out. So we have an indicator leading price performance, meaning while we were up on Friday, we closed off the highs of the session. It wasn't a very bullish session at all, except for RSI, which was very, very strong. So we haven't broken out on price yet, but RSI has already done so. Doesn't make it a guarantee that price is going to follow through, but the probabilities have just increased dramatically. So we could choose to ignore the signals by the market, or we could choose to say, okay, let's acknowledge it. We drew our trend line here. We memorialized it. Perhaps we'll pull back. We'll do a retest. But if we get a follow through on Friday's move higher on the VIX, that probably means that we're breaking out on price as well. What does that mean for Bitcoin? Well, if we know that the VIX trades inversely of the S&P 500, that means the S&P 500 is moving lower with the VIX higher. And if it's correlated to Bitcoin, well, then that means Bitcoin's moving lower as well. So why might stocks move lower? I spoke about this in particular with members last week, and I think I went over it on a couple of live streams as well about the threat of the 10-year yield, and we know what happens when the 10-year yield gets above 3%. Tech stocks go to hell in a handbasket. They can't handle it. So that's why we shorted the Qs, and we doubled up on our position last week from the prior week. So the 10-year yield broke out the week prior to last. And last week, we saw a continuation move up higher, and we closed just shy of that 3% handle on the 10-year yield. This is bearish. It doesn't mean that your cyclical names, your construction companies, your trucking companies, transports can't move up higher, but tech stocks are going to have a major problem. So beware of this chart. It's very, very serious. It is, if you ignore it, you do so at your own peril. Now, when you take a look at another chart, which I purposely go over every week and every day now with members, is the yield curve. Now, the last time I went over this chart publicly was, I guess, last Sunday night. I don't think I went over on Thursday night. And it hadn't updated. Stockcharts.com did not update. So it was last updated on the Sunday night live stream, and it was negative. It was heavily negative on the month, and it still is negative. But something happened last week that cannot be ignored. Now, for those that are new, you don't know what the yield curve is. I don't know what this guy's talking about. I'll keep it simple. The yield curve has predicted every major recession since 1955. So it is a great predictor of when we are going into recession. Let's face it, we are in recession. So we have an inversion of the yield curve. And I always say, don't go worrying about selling your stocks when the yield curve is inverted. Worry about the yield curve when it begins to steepen, move up higher. And what happened last week? A big, big move up higher on the yield curve. Yields jumped last week. They began to normalize. Equities generally do not behave well in that environment. So when you take a look at the weekly chart of the yield curve, here's the price action. We bottomed out the week before last. Last week, a big move up. I suspect we're going to fill this gap here. Do we break out to new higher highs? Not quite sure here, but this is a warning flag on the track, folks. This is when you pay very close attention to the yield curve. When it begins steepening. Let's go to comments. Paul M., hello. Welcome. Oil shrink by 3.5. Yeah, we're under. They by emptying out the strategic petroleum reserves, they really hammered the price of oil. But yeah, we're definitely have very, very low capacity. Natural gas is a headache. Big. I'm going to go over that in a moment. Natural gas. We're long of natural gas now. We have an options trade on it, but it's more of a synthetic covered call trade. Falcon, with everything so strong and a pullback to support, wouldn't you expect a market bounce to continue higher as it's tending? With everything so strong and pulling back, well, what really has been the pullback? It hasn't been a significant pullback. We're still up, 22% on the S&P 500 since the lows, or maybe the Qs it was. So we've had a significant low run up. We haven't had an orderly pullback. Let's bring up the Qs here. So here are the Qs. We bottomed out the week of June the 13th. We rallied up to a high of 24.14%. We're still up 19% on this rally. I wouldn't. This is not an indicator whatsoever that the Qs have pulled back and are set for a rally back. If anything, when you're using the weekly charts, which is that macro 10,000-foot view of the battlefield, it looks as though what we did is we set the stage last week for a continuation move lower. For those folks not familiar with what a bearish key reversal is, I have a 5-part video free tutorial below, my top 5 favorite candlestick patterns. It's free. Just enter your email address. It'll go out to you, 1 video per day over the next 5 days. So this is a very, very bearish setup here, and it's indicative of a index that wants to move lower, and we're already seeing it overnight. Valuations, we're still very overvalued. I didn't bring them up tonight because we have so much to go over, but the Buffett indicator and the Schiller PE ratio still very, very overvalued, even despite last week's pullback. Now, so that answers the question with regard to Bitcoin. If you want to know where Bitcoin is going to go, watch the stock market, watch the VIX. The price of Bitcoin is going to trade inversely of the VIX. Economic data coming out this week. We have durable goods coming out. Very, very important number. Now, you may be thinking that consumer credit rose dramatically, so we should get a good number this coming week. I wouldn't bet on that because people are going to the supermarket. They're paying for groceries with their credit card. So with consumer debt through the roof, if we see a miss on durable goods, that is going to be a huge, huge problem for the Biden administration because people are going to be maxing out credit cards. You're going to see banks cutting lines of credit because people got to eat. So if they're already buying on credit cards, their groceries, well, the banks are not going to finance that. It's not going to happen because they're going to max out their credit cards and they're going to stop paying eventually. Watch for a contraction in credit. On Tuesday, we're going to get the manufacturing PMI. That's the Purchasing Managers Index. We're also going to get the services PMI. Now, the services PMI, I believe, contracted last month, but they're expecting a read of 50. I think this is BS. The reason why this is at 50 is because when you look at the PMI, the Purchasing Managers Index, any read at or above 50 is a sign of economic expansion. Any read below that is a sign of contraction. So we missed last month. I believe on one of these numbers we definitely did. I believe it's services. We did okay on manufacturing. Watch these numbers very, very closely. It really hits at the narrative that we're not in recession. They're trying to redefine what a recession is, folks. We're in recession. Don't buy into the narrative. If you buy into the narrative, you're going to go broke. We're going to get we had the Empire State Manufacturing Index came out last week. Very, very weak. They expected an expansion. We got a massive contraction. Now, that in and of itself is significant, but not vastly significant. That, however, is if you get the Chicago Fed coming out next week and saying the Chicagoland area is contracting as well, it obliterates the argument that we're not in a recession. We're going to get this is the Fed's favorite number for inflation. We're going to get the PCE coming out for the month of July. Expect a good number here because remember, for July, energy prices pulled back. So that helps CPI. It'll also help PCE. That'll give the Fed some breathing room. They're supposed to raise by 0.75 percentage point in September. We'll see what that happens. But they are rolling off debt off their balance sheet. The trend is clear and defined now. And that is not good for equities. Real disposable incomes coming out. There's going to be really interesting stuff coming out. University of Michigan Consumer Sentiment Survey comes out as well. Big stuff coming out this week. Very, very chock full of economic data. What does that mean for us? It means that we're going to be trading earnings. I will not be trading Zoom. Way too volatile. Palo Alto Networks is a definite. As long as we get paid the right premium. If we're not going to get paid the premium, we're going to walk away, just like we did on a couple of trades last week. Advanced Auto Parts, another good one to play. NVIDIA, one of my favorites to play. A lot of bad news is already baked into the cake on NVIDIA. Salesforce.com, a definite. Again, assuming that we get the appropriate earning options premium. What we're also going to get later in the week is VMware. We will not be trading that. That's way too volatile. I think that's it. Abercrombie and Fitch, no. Peloton, definitely not. That's it. So Wednesday will end our earnings trades for the week. And if we have profits in NVIDIA and Salesforce.com, we'll probably let them expire worthless because we're sellers of premium, not buyers of premium. So energy prices are moving up higher. One thing longer term, which is a bit of good news, is that the potato in chief has finally had his hand slapped. The executive order he issued back in, I think it was 2020, to ban, one of his first actions as president was to ban new leases for oil and gas exploration. That is illegal, and it was deemed illegal by a federal judge. This is now done. Now, you may not see an immediate move higher on oil and gas. Why? It's because the minions in the White House, they'll try to find some bureaucratic maneuver to try to stymie the oil and gas explorers so they could damage the economy even more than what they've already done and continue to do. So a bit of good news anyway. Now, this was mentioned earlier, so it's worth going over. We have Europe is in for a major, major crisis. Germany ruling out extending their last 3 nuclear power plants will shut them down December the 31st, 2022, in the middle of winter with a natural gas shortage and electricity rates at 10 times normal levels. This is insanity. This is crazy talk. And they're going to do it because they want this Green New Deal. They want Build Back Better. You have communists that are in charge of the German cabinet, US cabinet, EU in general. These people are communists. They're arch criminals. So they are going to make people suffer and suffer very, very bad. So if you're wondering, should I be long of oil, gas? You darn better be long of it, especially natural gas, of what we are long right now. Now, Wall Street sees another big commodities rally in 2022. I agree with this partially. Wednesday saw another rally sparked by the EIA. That's the Natural Gas Inventories Report, showing a large drop in U.S. crude inventories and sufficient enough to bring the price of oil back to $100 per barrel. Natural gas futures have also shed gains early in the week, though the outlook ahead of winter remains bullish. I brought up a chart on Thursday night. We are very, very undersupplied with inventory on natural gas. These names are moving higher. Now, the industrial metal case, I kind of scoffed at this, but you do have a bit of a rally in copper, but I'm still bullish on natural gas and to a lesser extent oil. China remains a big uncertainty, and this is very true. This is why I'm not bullish on the industrial metals. China remains a big uncertainty for Wall Street, which can't get a grip on future demand, while Beijing continues to struggle with the reemergence of COVID-19 in response to its zero COVID policy. Zero COVID policy. These people are out of their minds. I'm not even going to read anymore. It's all about China. So as goes China, so goes the commodity markets. And how's China doing? So I think you can get the drift here. So China overbuilt dramatically, and they had ghost cities. Now I did a little bit of research on this. This is old footage. I don't want to put out. I want to put out disclaimers on this stuff. This was put out initially on February of 2021. So it's aged a little bit. But you can see what the Chinese are doing. They're taking inventory offline. They have a crisis over there. They built ghost cities, and that's how they created the GDP that they did. That's why you saw building materials skyrocket, because they were building ghost cities. The guy Jim Chanos, the famous short seller, he brought this to my attention many, many years ago when he was shorting China, and rightly so. He booked a lot of money. So this is what's going on in China. So for those folks that are looking for immediate rally back on copper prices, steel prices, I doubt it. I don't see it. They're demolishing cities. Maybe they're getting ready to rebuild them. Who knows what they're doing over there? But right now they're in the phase of destruction, not construction. Real quick note here, and this is an ongoing issue. I don't know why people aren't in jail, but you may finally see that change. I can't believe that this Justice Department did this, but they did it. They filed RICO statutes against JP Morgan for gold trading, and it looks like they have them on RICO predicates. Where is that? Here, I'll share this. It's not enough to really spend too much time on. But for those folks out there that are wondering what the heck is going on out there with the gold and silver markets, JP Morgan. I just shared that. Moving on. All right, build back better, whatever you want to call it communism. It's exactly what it is. Something is looming geopolitically, and we had better start taking it seriously, folks. Everything I've said this each time I've gone on a live stream. There is literally nothing I could think of, whether it be COVID, whether it be the war in the Ukraine, whether it be the potential conflict in the Taiwan Straits. Everything is man-made, self-inflicted damage, and it's only going to get worse. Inflation, self-inflicted. They printed $2 trillion and they gave it out to people that weren't working. What did they think was going to happen? It doesn't take a genius. It's self-inflicted. They are purposely making people poorer now through inflation. They want you to be less mobile for the new climate crisis. It used to be global freezing. Then it was global warming. Then they couldn't get that right. Now it's climate change. Nobody believes that anything that's being passed right now is going to help the climate one way or the other. So the narrative is still alive and well. It's all about controlling you and me. So the image you got to keep in your mind is that we are a bunch of frogs in a simmering pot, and they are turning up the temperature. So this is not just happening here in the United States. It's happening in Canada. Canada is so bad right now. Europe, the EU, communists, even Japan, shocking. Australia, New Zealand's gone. Australia, New Zealand, gone. Underneath all of this is a drop in energy production. The same nations trying to lower economic activity. The political policymakers are attempting to manage the process without informing the citizens of the unspoken goal. Shortages in oil, coal, natural gas are self-inflicted problems, all part of the Build Back Better agenda. Nothing is a coincidence. Nothing is a coincidence. If you're not registered to vote, find out who supports this stuff and vote for the guy that's against it. For the person who says they are for this type of stuff, I don't care if they're a Republican or Democrat, vote for the other guy. Because a pox on both their houses. We have a uniparty system right now, and thank God many of them have been primaried out, meaning the Republican rhinos, the Liz Cheneys of the world, out of office. They are gone. So there's a day of reckoning coming here, but this is happening far more quickly than we're able to regain power to try to stop this here in the United States. There's no precedent for nations collectively and intentionally trying to reduce economic activity. We have 10 minutes to go. I'm going to blow through this really quick. I want to go over some chart requests. Inflation is quietly stripping us of our property rights. People can't afford to buy a house anymore. Yields are going higher. Prices are still high. So people can't afford to buy a home. They're stuck with credit card debt. They're stuck with student loans. Why are student loans so high? Because the government got involved under Obama. And government subsidized student loans went through the roof. College tuitions went through the roof. Now people are in the poorhouse, and you can't write off that debt in bankruptcy. More. United Nations recruited over 100,000 first digital responders to push establishment COVID narrative. It's not a shock. It's just a validation of what we knew to be, and I was saying it way back then. And they were demonetizing my videos. They wouldn't take them down. They would certainly demonetize them, put on a narrative saying check the CDC website on my live streams and my videos, because I called this the Great Grift from the day it started. The CCP virus. I can't even say the name of the virus anymore. So they hired 100,000 digital warriors to go to their keyboards in their mother's basement to counteract any guys like me that were trying to get the truth out. And now this villain, this arch criminal is
rate.
finally
We didn't,
admitting that it
and
was all bullshit.
and then at that point we didn't really understand the fatality rate. We didn't understand that it's a fairly low fatality rate and that it's a disease mainly of the elderly, kind of like flu is, although a bit different than.
Okay. Now they admit it. This is what this guy's doing here is he's reinventing himself. He's been shown to be I don't know. He was on Epstein's jet. You read into that what you will. I don't want Bill Gates' lawyers coming after me, but he's trying to rebuild his image, and he was the biggest proponent of the vaccines. We're seeing more deaths due to vaccine injury and by lockdowns than by the disease now. So read into it what you will. This is all an attack on us, folks. Find out the people that you should be voting for, get registered, and vote. Manchin's piece of human waste. Manchin, I'm sorry, this is a family-friendly show. I used the word BS earlier. I apologize. I try to keep it clean. So we were told by the great potato in chief that the Inflation Reduction Act would not impact anybody making less than $400,000. This is from the CBO, the Congressional Budget Office, from the federal government. Who's going to pay taxes? Here is the income brackets. Less than $75,000. You're going to see increase of, I guess it's 26.5% in taxes. $75,000 to $200,000 bracket, a 29.6% bracket. 200,000 to 1 million, 24.1%. Those at $1 million or greater, 19.8%. Folks, we are the enemy of the state. They are coming for your wallet. They're coming for it. They got to keep this regime monetized. The Federal Reserve can't print any more money. We are bankrupt. They're coming for our wallets now. This is the reality. For people making more than $100,000, I believe this is an estimate of $10,883. I'll share this out with you. It's from the Heritage Organization. Pretty reputable stuff. And these numbers are produced by certain of these by the CBO, Congressional Budget Office, and the IRS. So we were lied to. No great shock, but let's get the truth out there. All right. I'm going to skip over a couple of these because we got way too long in the tooth here. EU natural gas soars to record high as Gazprom announces new halt to flows. Good for us. We are long of natural gas. Morgan Stanley, cash looks relatively attractive right now. No. Relative to other currencies, the US dollar looks good. When you have inflation that's rising at 8.5% and you're getting paid less than 1% on your interest-bearing accounts in a bank account, or less than 3% on a 10-year yield, you're losing money by keeping it in cash. It's a net loss that you can't even write off. So it's not wise to keep your money in cash. What you should be doing is exactly what we're doing. You should have your money in a trading account. You should be using cash flow strategies, selling premium, selling options to generate cash flow. If you want to try a 14-day free trial offer, sign up with us, join our forum, and we will show you how we trade options for premium. We are not buying stocks right now. We are strategically adding to commodity positions, gold, silver positions. Other than that, we are trading options, and we are now with a not a net short. We have a hedge on short the Qs, short of Apple. That's what we're doing moving forward, and the strategy has worked for us fabulously. I think that is it. Let's do some chart requests. Folks, we're going to be using TrendSpider Automated Technical Analysis. They are a sponsor of this evening's highly produced show coming to you from the glorious studios of us, the Contrarian Trader, on the lovely Long of Island. And what we're going to do is we're going to go over Larry's request. Actually, it's Franklin's request first. Franklin's got GLNG, love it. Golar, I think Pat's on here. Is Pat still on? He's a big Golar fan. We're going to begin with a monthly chart. I got to play catch up here. Beautiful breakout on a monthly chart here. Take note, we're putting in higher highs now. Now, you're going to have resistance up here, but it's rising. That's okay. We rallied close to it early. I should say last week, not early in the month. And we faded a little bit. We are widening out the Bollinger Bands. This is very bullish, but these are 3 standard deviation Bollinger Bands. Just be aware, we shouldn't really be in that neighborhood. You can see how we back off of that. This line in red, that's the third standard deviation Bollinger Band, but they're widening out. This is a perfect chart. This looks really, really good. Your RSI is rising. Your Stokes are rising. So GLNG looking strong weekly time frame, daily time frame. We got a pause last week. That's the pause that refreshes. I think that GLNG is a buy, and it's probably going up higher. Franklin, your other one. Let's refresh this. Oh, Jeff slipped one in there too. Okay. Franklin Joe, one of his favorites. Joe, this puts you long of coffee. It's an ETF. So, Joe, let's go to the monthly charts, get a feel for where we're at. How to correct. Oh, this is looking sweet. This is looking sweet. So I think that we're going to break out here fairly soon. We don't have a breakout yet on a monthly chart. Let's go down to the weekly chart. Let's widen this out here a bit. A little bit too much. A little bit too much. Let's come back to this. Oh, I see what happened. Okay. So weekly chart, they attempted a breakout last week. The breakout was rejected, and we fell back down. I would be careful here. I like the monthly chart, but we had a failed breakout. We broke out the week of August the 8th. Above resistance. Last week, we gave it back. We broke back down below, not one support level, but 2 support levels. So what I would wait for here is a retrace back to this lower band of support. We'll keep a little bit of sensitivity on. We'll keep this active for a couple of weeks. I want to know if we break through, touch, bounce, set it and forget it. All right, so I would hold back on this one. I like the monthly chart. The month is not over. The week is over, and it wasn't a good week. Daily chart we're holding on to. This is an automated trend line, folks. I did not draw the line in blue. Note this line in blue. Now you see it. Now you don't. That's the algorithm. 35% discount code below. So we held on to support. We also have a volume-weighted moving average in orange. So if we break down to new weekly lows, Franklin, we're going to head down to this lower band of support at around $58 a share. So that's the price point at which I would watch it. Let's just make sure we close above it. I like the RSI. I like Stokes. They're flattening out, threatening to hook back up. So, in fact, Frank, now that I'm looking this close, we broke down below this support level, holding on to the VWAP. We're holding on to VWAP. That's it. And that's really not that widely followed. That's just my own indicator. So just be careful here with getting long of Joe. AR for Jeff. Let's go to the monthly chart. Antero Resources, a resource play. A really, really nice monthly chart here. Good weekly chart. We closed above this moving average here. Actually, the moving average acted as what is this, a 21 period? 20 period. 20 period moving average in green. It acted as a breakout point. We broke out the week of the 8th. Last week, we did a retest, and then we reversed to close higher. Antero looks like it's going up higher, bullish, daily view. A bit of a bearish reversal bar on Friday. Again, automated trend lines, folks. I don't think I've ever looked at this chart before. I have. I drew this line. All right. I just forgot. So here's our upper band of resistance in red. I have a support level here in green. The algorithm is picking off another support level down below. I like the support level here at 40.28, Jeff. So 40.28 looks like a good point at which to add more, enter, open up. But I use a tight stop right below that because if it fails, it's coming down here to 38.85. And that would be a really, really good entry point because that marks the lower band of the rising uptrend channel. We're going to take NVIDIA, mRNA, and CMG. I'm going to lock it for Sunil, NVIDIA. I'm building a greenhouse right now, smart. While I listen, I have 4 months of emergency food supply, smart. Needs more fishing rods. Yeah. Salty Army knows. Yeah, you got to be part of the Salty Army, of which I am, to know what fishing rods are. For those, it's code because you get strikes against your channel to use a certain word at times. So fishing rods are, you got to read into the imagery. Welcome, TZ Burton. Welcome, Salty Army members. We are of like mind. CMG, we got mRNA. Big trouble there, Talon. They're losing government funding. Lovely. Chemical cast. Yeah. Absolutely. Put the pedo sympathizers on watch. No doubt about it. There is a day of reckoning coming. There is a day of reckoning coming. These Vichy sons of bitches. I did it again. Family-friendly show. I apologize. Family-friendly show. Okay, let's do it. Leave it off. NVIDIA. Now, NVIDIA reports earnings this week. So we're going to take a look at NVIDIA from a macro perspective. I want to see how much damage has been done here. And a lot of damage has been done here to NVIDIA. It's lost 2/3 of its value over the past year. I love the company. I believe they came out with bad news. Somebody remind me, Sunil, if you have the information, what bad news they came out with. I think they lowered guidance. Correct me on that. So if the bad news is priced in here, I may be a little bit more aggressive on the earnings trade because whatever bad news is already priced in to their earnings. That being said, I may not get paid the premium on the trade that I want to because the risk is not as high as people want to price in. So I may have to pass on NVIDIA earnings. Now, we appear to have stopped going down. We bottomed out in July. I think we're going to retest here. I think we're going to retest these lows, 144.36. Sunil, good stuff. Yeah, they lowered earnings guidance. Yeah. So thank you for that, Sunil. So yeah, a lot of the bad news that could come out on earnings is already in the price, right? So it should be a fairly good trade to put on here. So I'm looking forward to that trade. Good, Pete. All right, CMG. All right, so let's stick with NVIDIA for a moment here. All right, weekly chart. I think we got to retrace. We got to do a double bottom here. It could be a higher low. It could be a retest of lows. We could break to new lower lows if the market rolls over. So I would not be a buyer here. I think there's way too much resistance above, and I certainly wouldn't buy in front of earnings. No way, no how. Price action on Friday was horrible. We're coming down here. I did not draw this trend line, automated trend line. Boom, TrendSpider. Let's create an alert. I want to know if we break through. I have no conviction here one way or the other. We're just going to watch and see how it behaves at support. Maybe we'll put on a trade. It could be an earnings trade, excuse me, a options trade or a common stock trade. We're not married to any one approach. We just care about the best return on capital. So that's set. MRN, oh, CMG. We had a difficult time on earnings. We had a gamma event there that squeezed a lot of shorts out, and we finally got made whole in that trade. And CMG is looking good. I think this is a short, though, and I'll tell you why. It has nothing to do with the fundamentals of the companies. In fact, I love Chipotle Mexican Grill. Great food, good stuff. The problem here is a technical one. You have a market that is under a lot of pressure. You've had a stock that's been in a very, very long consolidation. What did it do on earnings? It ripped through the ceiling and it wiped out a bunch of shorts. I know, I was in that trade. So we broke out above weekly resistance here in green. We rallied up and into a couple of moving averages. You got to suspect that we're going to pull back and do what? We're going to retest this breakout point. What was resistance back here is going to get tested, and now we're going to see whether or not it holds as support. What's the trade here? Me, I like the options here. I know CMG options are cheap. I would be a buyer of a bear put spread. What is that? I would buy a 70 delta put option. I would then simultaneously sell a put option. I would help that sale helps finance the purchase of the put option. And I would use as my price target this price target right here. And as soon as it comes into the sensitivity range, which I'm setting up right now, we book our profits and we walk away. Because we're not going to bet that we're going to break down to new lower lows or break support levels. None of that nonsense. We're playing with time-sensitive instruments. Now, I'll go out 90 days on these options, so you don't get too much time decay, but you don't want to be married to a long options trade unless it's a hedge, going out long-dated. Like the Qs trade that we put on, they expire in June of 2023. That's how long. And we are good to go. So CMG, I'm bearish on it only for the technicals. And you could see what happened on the week last week. We rallied. And I'll tell you, folks, this is the value I get personally. It saves me so much time. The automated trend lines. I didn't even know this was up here. We rallied up and into resistance. We reversed. I think we're retracing all the way back down here to, let's call it, the true numbers at 1465, but it's declining. Let's just say 1450, and I'd be out of the trade. We closed on the week at 1672. We closed up, but we gave up a lot of real estate. Daily chart, we broke support on Friday. So we're probably going to flounder around here, assuming that the market doesn't tank. And we're going to look to open up a bear put spread trade on Chipotle. I would short the common stock, but it's way too much money for us to do that. So the best play here, short using a bear put spread. Let's leave it off with, you're welcome, our train. What's the last one I had here? mRNA. All right, this is Moderna, and this stock's in trouble, a lot of trouble. I can't short it yet. You have a monthly head and shoulders setup forming here. Left shoulder, head, right shoulder. Where I would short it, let's see if I can use a weekly chart. Nah, monthly chart's better. Where I would short it is on a break below the 45-degree neckline. If we break down and close below 118.56, it's a short all day long. We close down below that mark. It's a short. That would be a break of critical support, also known as the neckline. Now, they lost funding by the government. You got to keep in mind, mRNA, Moderna, this company was almost destitute prior to the CCP virus. If it wasn't for the disease, they would be out of business right now, probably. So this is not them at all. Weekly view. We broke down below critical support last week. You got to avoid this. If you're a good swing trader, you could short in a new weekly lower low. That's a possibility as well. Stay small. Wait for that break below support. There's going to be a lot of defense of the support level. Daily chart, you have support immediately below. As a matter of fact, we bounced off of it on Friday. So I want to know when we break it. Okay. And that is mRNA. Folks, Pat, NVIDIA, huge revenue decline guidance. Yes. Thanks for that, Pat. PANW keeps rejecting 200-day moving resistance. Kathy. Hello, Kathy. We have a lady here. We have way too few ladies. Usually we have Trish on. Well, she watches on the replay. And only a couple of other ladies. So we always want to make sure that we accommodate. I don't have the 200-day up here. Let's bring it up. I don't know if I set that up right. Did I set it up right? No, I don't think I did. Well, it looks right. Yeah, let's bring it up on. I had the 200-day already set up on stockcharts.com. Yeah, that's a great point, Kathy. Kathy, thank you very much. Kathy brings up a very, very good point here. It's not the 200. Well, I'm not sure if you're using the same chart, Kathy, but what you're seeing here is definite resistance at the 50-day. Oh, this is a weekly chart. I'm sorry, Kathy. My bad. But I want to come back to this chart because this is even more dire. When you go to the daily chart, my apologies, Kathy. When you go to the daily chart, yeah, rejection to 200-day moving average. Kathy's 1,000% correct. Let's go to the save chart I have up here because I want to memorialize this because this is important stuff. They are reporting earnings this week. And this is a chart that wants to go down. This is a rounding top. If we break 500, the stock becomes a short candidate because what is happening, and great point you bring up on the 200-day moving average, Kathy, but I'll also point you to the weekly chart. And what you're getting on the weekly chart is a negative divergence setting up on the 20 period in dotted green and the 50 period moving average on a weekly time frame. So this is bearish stuff. So to me, what this looks like is a continuation breakdown. And again, another example of a classic head and shoulders setup. Yeah, so we break down below $500 a share. Let's say 490 to be conservative, and we close down there on a weekly time frame. That's a major, significant breakdown on Palo Alto Networks. This is a bear flag setup. Can it be negated? Sure, it can be negated. A lot of people get lured into head and shoulders setups because they look so promising, but all too often they get negated. So be careful. You want to wait for that neckline to get broken and then enter the trade, unless you're very, very good at stopping out, admitting you're wrong, and keeping your positions very, very small, especially to the short side. So awesome point, Kathy. Thanks for being here. All right, folks. Amy is here. Welcome, Amy. Yes. All right, folks. Thank you. Thank you for being here. Everybody have a profitable trading week. Hit the subscribe button, like, tell a friend, don't tell a friend, take some action, do something. And everybody have an awesome trading week. I'll talk to you soon. Be well.